A very good afternoon. It's a brand new week, brand new episode of Market View. Thank you for tuning in this afternoon. My name is Lungelele Makakwelatu. Watches on YouTube. Our page is Eswatini TV. In a move aimed at alleviating the country's road infrastructure challenges, the government of Eswatini has introduced a 40 cents road authority levy. This new levy imposed on fuel, according to the PS in the Ministry of Public Works and Transport, Tulani Mkalipi, is meant to help address the country's critical road budget backlog, which currently stands at an alarming over 6 billion emalangeni. Business journalist Nelson Lamandla had a conversation with the Principal Secretary, who answers questions on how the funds will be managed, as the country currently does not have a road authority agency, as well as the consultations before the levy was effected. And later on our last segment, Anil Esbia joins us today for today's markets analysis. And in our news today, Business Eswatini has urged local businesses to diversify their operations in light of the recent introduction of the 10% baseline tariffs by the US. Stay tuned. For now, let's go straight to our first story. Business Eswatini has urged local businesses to diversify their operations in light of the recent introduction of the 10% baseline tariffs by the US President Donald Trump in different countries, including Eswatini. Business Eswatini's President Mvuselelo Vagute said this new tariff policy is a wake-up call for businesses in Eswatini to explore other markets and diversify their product offerings.
As businesses operating in Eswatini, we respect the sovereignty of the United States of America to make such determinations. And in the normal course of business, we as business people generally are always the subject of the law. You know, once the law has been set, we then go and reconfigure our businesses to ensure that we can align to the administration's procedures or executive directions that have been issued. So I think in this particular instance, we've engaged our members, particularly those that export into the United States of America, to understand what sort of impact this is going to have for them and how we can be of assistance to them. Obviously, the Minister for Commerce already issued a statement that the government of Eswatini is engaging directly with the government of the United States of America. We hope that there will be, as we've seen with other countries, there have been some changes. If there are changes, we hope for the better. But if there aren't changes, you know, businesses always find other ways to look at other markets. I just want to say that it's not all markets that will allow your goods to enter their economy free of tariffs. So I think what businesses are advised to do then is to look at, first of all, whether there's demand, because it's not just about finding a market when it comes to produce. It's also going to those markets to sell and advertise your produce so that people know it. So that takes time. We know that sugar, for instance, I hope it's not affected by these tariffs because it is under the GSP, which is slightly different, but it could be that it applies to sugar as well. But the demand for these products globally changes, and other countries also have similar demand. So we do encourage our business people to look at their business processes, look at identifying alternative markets, because we always say in investment, never put your eggs into one basket, because when they break, you know, you lose everything. So in this particular case, what America is teaching us is that we must always think of opening up our markets, finding new markets, and making sure that when one country changes, because another country might introduce the same, and you want to make sure that when that happens, you do have alternative markets. But I think what is also important for the Eswatini economy is that much as we produce so much sugar that goes for export, and we can't consume all of it, we also need to produce more for consumption in this economy.
He has also said they will play their part as Business Eswatini to assist local businesses wherever needed.
It's more collaboration with the Ministry of Commerce, because even the South African Customs Union, it's the Ministry of Commerce that drives access to those markets, because a government will reciprocate another government. So ours is to influence the government, and also we advise our members to do the same. We do engage on a regular basis through the Trade and Commerce umbrella led by Vice President Mr. CIA on a regular basis with the Ministry of Commerce to ensure that all that we do is actually beneficial to our members in a big way.
Fagutse has emphasized the need for innovation and strategic adaptation in order to maintain high growth and competitiveness in the global market. He has also called for stronger focus in increasing value-added products, which can help minimize the impact of such tariffs and promote economic resilience. The African Growth Opportunity Act under the United States of America has played an important role as a mechanism for promoting trade between Eswatini and the United States and has contributed immensely to the growth of Eswatini's exports, especially in sectors such as textiles and apparel, agriculture, predominantly for products such as sugar, fruits and nuts, amongst others. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa Mbabane.
Major stock indexes plunged on Monday as U.S. President Donald Trump showed no sign of backing away from his sweeping tariff plans. It started in Asia, where Hong Kong's Hang Seng has been among the hardest hit, falling 12%. We've also seen slides in Taiwan, Japan, China, India and South Korea. It's been a similar story in Europe, where Germany's DAX dropped around 10% at the start of trading.
Every day, 4.5 billion euros worth of goods and services cross the Atlantic between the European Union and the United States. This bilateral trade is the largest in the world. The tariffs imposed by the Trump administration now make doing business in the US more costly for Europe. And Brussels is preparing to respond strongly. But the preferred option in the EU is a negotiated solution with Washington. Germany's finance minister even calling for removing all tariffs on all imports.
The easiest way to assure balance and fairness is if everyone goes to zero, and then we have free trade and efficiency, economies of scale. The key is to send a signal that we are willing up to including reducing tariffs all the way to zero.
This would be welcomed by the world's richest man.
At the end of the day, I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone.
Free trade between the European Union and the United States remains an aspiration, and experts I've spoken to here agree that cancelling the tariffs on the goods and services currently traded between the US and the EU would be good for both sides.
Dropping tariffs bilaterally between the US and the EU most definitely would be the best outcome. Having cheaper trade between those two economies would benefit both of them. Whereas the flip side, if we have tariffs 20% on each side, that increased costs for both sides. Tariffs are a tax. Tariffs are an import tax, and that can be lowered very quickly, very easily.
Liberation Day.
On the day he announced the US's new measures, Donald Trump suggested he could be open to zero tariffs.
To all of the foreign presidents, prime ministers, kings, queens, ambassadors, and everyone else who will soon be calling to ask for exemptions from these tariffs, I say, terminate your own tariffs, drop your barriers.
Conventional wisdom says there are no winners in a trade war. It is understood in Europe that businesses and consumers on both sides of the Atlantic stand to lose if Brussels retaliates in a way that raises the risk of a trade war of tit-for-tat tariffs. Calls for zero tariffs, a free trade zone between the EU and the US, are growing louder from business. But it will have to be the will of the politicians before it can become reality.
And that's it for our business news. It's 10 minutes after 2. After the break, Nel Siwe has a conversation with the Principal Secretary at the Ministry of Public Works and Transport. Stay with us.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406 7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. You're still watching Market View. This is the Monday edition. Thank you for staying with us. In a move aimed at alleviating the country's road infrastructure challenges, the government has introduced a 40-cent road authority levy. This new levy imposed on fuel, according to the Principal Secretary in the Ministry of Public Works and Transport, Tulani Mkhaliphi, is meant to help address the country's critical road budget backlog, which currently stands at over 6 billion Malangeni. Business journalist Nelsiwe Ndlangamandla had a conversation with a PS who answers questions on how the funds will be managed, as the country currently does not have a road authority agency, as well as the consultations before the levy was effected. Let's take a listen.
Welcome to Market View, PS. Thank you for joining us on the show. The road authority levy has already been implemented, PS. So for the benefit of someone at home who doesn't understand what it is, can you start by explaining to us what is the road authority levy and why is it important?
Thank you very much for raising this important question. I think you will recall that sometime last year, the Minister of Public Works and Transport piloted a bill then in Parliament towards establishment of the Roads Authority Agency. The Roads Authority Agency is a public institution responsible for maintenance of roads in the country. So Eswatini is not the only country that has roads authority agencies. Actually, almost all Southern African countries now do have the roads agencies, you know. But then how then roads agencies are financed? They are financed through the usage of roads infrastructure. So those who use the road would then pay a certain amount of money, you know, to finance operations of the roads agencies, like for maintenance of roads and to some extent also construction of new roads. So how that is done, you know, they would normally in other jurisdictions establish what we call roads tolls, you know, roads tolls. And roads tolls, you know, like when you use a road, then you pay for the usage of that road, you know, and then the roads agency would then take that money back into maintaining the roads infrastructure, you know. And another way of raising funds for maintenance of roads, it's through licensing of motor vehicles, you know, licensing of motor vehicles. So all that money would go to the financing of the roads agencies. And also now the third one would be fuel levies, you know. So countries will then determine, you know, which one of these roads financing streams will be viable for them. So in our case, the issue of roads toll was also discussed, you know, but it was said, no, for now, let's put it in abeyance, you know, until such time that, you know, the economy picks up, you know, because, you know, like the people who use the roads often, you know, we use them for various reasons for transportation of goods and services. So if like you're going to put in a road toll, you know that cost will be transferred to the end users, you know. So Parliament then said, no, for now, let's not explore the road toll. It's a discussion that is still alive, particularly for some roads. Particularly the road from Ngwenya to Manzini, for example, which is one of our main heavy. It's a discussion that's alive. I'm not sure when, that will come to fruition. But then again, then we said, the road toll for foreign registered vehicles will still be collected, at border points. So we are collecting that road toll. So if you're using a foreign registered vehicle coming into the country from either Mozambique or South Africa, you pay, a road toll, at the borders. So, but the collection of that resource fund stream is very small. Maybe it is in the region of about 70 to 100 million or thereabout. So it actually wouldn't make any impact, in terms of roads maintenance. Then Parliament, there was then a discussion to say, let's see how then we could collect revenue through fuel levy. And there was a discussion around that.
Were the different stakeholders consulted, peers like the road transport associations?
Yes, there was serious consultation with prospective users of the roads and also with transportation at the time, because transportation associations and the councils. But we finally settled it, for 40 cents, So the 40 cents was some kind of a happy medium, I would say, because again, we're saying, the 40 cents must not, the levy must not be heavy, to a point where, it will overburden, taxpayers, but also not too small to a point where, even the collection doesn't make economic sense for the purpose for which it is collected, So we reached that happy medium of 40 cents. Then the ministry responsible for finance was then the one who would then give guidelines as to how it is going to be collected and how it is going to be reported on in terms of accountability. A decision was taken again then that it would start being collected. This is last year. But again, Ministry for Finance then said it would be best then to start collecting the fuel levy at the beginning of the financial year, which is this financial year, April 1, going forward. So when April 1 arrived, yes, then we started through the Ministry of Natural Resources, then collecting, that fuel levy.
How is the Road Authority levy going to be administered, peers, considering that currently in the country we do not have the Road Authority agency?
So when the levy is collected, it is deposited in a dedicated account, sitting at Nedbank. It is not like money that is coming to government directly. It will be going to that dedicated account. Yeah. For now, because the governing body for the roads agency is not in place, so the funds are not used for anything else. They are just collecting into that account, so that when the governing body, the Roads Authority governing body, gets into office, then they'll be the ones who will then use those funds. That is not the only one that is actually collected. We're currently, what's going into that account, it will be the fuel levy, it will be the road toll that I spoke about, collected from border points, and also vehicle licensing fees. They'll all be going to that.
Can you share with us, peers, how much you want to collect each year from this Road Authority levy? I'm sure as you are implementing it, you have some projections.
If in a given year, we say probably going to collect from all these sources, so we are estimating, because these are kind of views. We're estimating that we probably will collect, say, in the region of 280 to 300 million in a given year. And when like the requirements for a year, current requirements for maintenance in a year, what I'm saying about like it's counting into several billions. So the account will then have to accumulate for several years before it can start being like useful. Because I mean, just one road, for example, your MR3, the road from Gwenya through Eswatini to Matapa, currently, just this year alone, that road, it requires like for its complete refurbishment over $1 billion Emalangeni, just to get it back to state. If you look at that road, if you can travel in that road today and drive very slowly, you start seeing like cracks, huge cracks in the middle of the road. If you're going down to Kasomjalose, the road is separating in the middle. And it's because of age. It's not like maybe it was poor construction. It's because of age. That road was constructed in the 1990s. So it is actually very solid, because, 30 years down the line, the road needs to be redone, completely redone. So it has reached a stage where it requires to be. So we need that money. It's not like when like government, when we start collecting the roads levies and things like that, and then budget requirements from government will stop completely. They will reduce gradually, over time, But now we're saying, let's all carry that responsibility, to make sure that our roads are in a good state of repair.
Mhlambe umbukele ekhaya PS utatibuta kwekuthi engabe vele uhulumende uyidzinga kangako le mali aze afune nekuyithatha ngalakithi. How much do you need as a ministry for rehabilitating, maintaining roads and building new ones?
It would look like probably quite a lot of money. It is actually not, if you look at the budget requirements for maintaining public roads, and maintenance of public roads in any given year. The backlog that we have a backlog of over 6 billion emalangeni in terms for maintenance of public roads. Most of our public roads are in a very, very serious state of stress, due to lack of maintenance.
You are saying, PS, this road levy will be so much important because it is going to help in the backlog of over 6 billion emalangeni that you still need as a ministry to maintain and rehabilitate the roads. Asethembe PS kuthi le mali letawukolekwa la yimali lesitawugcina bese siyayibona seyakha yona le migwaqo njengoba isimo semgwaqo even singasiso lesihle kahle. Thank you so much, PS, for joining us on Market View.
And that was business journalist Nelson Dlangamandla in conversation with the Principal Secretary at the Ministry of Public Works and Transport on the 40 cents Road Authority levy and how the funds will be managed. After this, we're joined by Saneless Via for today's market analysis. Stay with us. Welcome back. It's 24 minutes after 2, and this is our last segment of the program. We're joined by Sanele Sbia, in-house economist, for today's market analysis. It's a Monday, and Trump's tariffs are rocking markets globally. Very good afternoon, Mr. Sbia. Quite a lot is happening. What is happening? Start off with the U.S. markets.
All right, good afternoon, Lulu, and good afternoon to the viewer. So, as you may rightly put it, what we are seeing is those tariffs rippling through the markets. And if you look into the U.S. markets, the S&P 500 is now trading very close to that 5,000 mark on average. I mean, we're used to seeing it around that 6,000 mark. And then same thing with the NASDAQ. composite index coming down to that 15,000 from that 16,000 just last week. And the Dow Jones, we're at around $42,000 per volumes, right? But now we're at 38,000. So that just shows you how the market is selling off. And that's largely due to those Trump tariffs and no clear direction on whether he's going to hold back on those tariffs. When it started out, we were hoping that it was mostly that out of the deal type of maneuver, but it seems as though now they're here to stay, and the fear is it could drag the global economy into a recession. That's why stocks are selling off across the globe. And when you look into London again, same story. You look into Europe, markets are selling off there. That sell-off is driven largely by those Trump tariffs. I mean, if you look at the DAX, we've not seen the DAX on 19 for the past 6 months, but now it's back to 19 and it's continuing to sell off. If you look at London, we do expect that the FTSE 100 should actually be relatively stable because of the faith that people have in terms of the London equity markets. But again, that uncertainty across the globe with the Trump tariffs. And also, we do know that quite a number of those are targeting Europe. And Europe is planning to respond. They have around 400 pages of just commodities they can target in the US. So we are slowly moving into a trade war. And then if you move into the Asian markets, again, the story remains the same there. We're seeing the Nikkei leading gains in losses in the Asian markets. I mean, recall just last week Friday we were at 35,000, coming in from 38,000 overall trade volumes just early that week, and then the previous week we were at 42,000. So now it's sold off so much so that it's just on the touch of the 30,000 mark, something unprecedented. So what we are seeing here is 2008, you remember during that global financial crisis. So the numbers are really just moving close to those numbers. We're seeing the Hang Seng back at those COVID level, those pandemic level in terms of volumes. And remember, just a few days ago, last week, we were at say around 23, and then we had seen it coming back to those pre-COVID levels, but now it's back to those COVID levels, and Hong Kong is also losing quite a number of points there. Coming into South Africa, again, in South Africa, what we are seeing is we are moving back to the pre-GNU levels. And that's purely because if you look across the globe, Wall Street alone has lost $6 trillion just in the space of 2 weeks in terms of the values that are being traded there. Not even 2 weeks, those 2 days from Trump tariffs to today, so we've lost around $6 trillion. Same thing with the JSE. And then now you couple that with the fact that when President Trump announced those tariffs, he mentioned South Africa. He spent a good 20 seconds talking about South Africa and what the bad things that are happening there. So markets read into those things to say that the story is not yet done for South Africa in terms of the tariffs, and probably we're going to see more trade restrictions on South Africa. And then if you move into Eswatini, at least Eswatini is a bit stable, purely because we have what you would call your dividend investors. And then equity, when you move into commodities, you'll see that, gold is shining because of all this uncertainty, but it's not gaining as much as one should expect it. We're not yet at those all-time highs because people were eyeing the markets and seeing what it means. And also it signals that we're moving into a bearish market where, investors would rather hold on to their money and keep it in terms of bonds. We're seeing bonds rallying in the markets. And then because of the recession fears, Brent crude is actually crashed down to that 60 mark. We'd anticipated it was going to stay around 65 at most, or in that 70 mark, but the fears that the global economy could go into a recession and therefore for slowing demand, we're seeing it come down. And then into the currencies, we are seeing a lot of losses across the board in terms of the Lilangeni dollar exchange rate. Also, if you look at the euro, Lilangeni exchange rate, we are back at that 19 zone for the dollar, for the Lilangeni. We had not seen that post the GNU, was hovering around 17 and then 18 now. So those exchange rate fears are now beginning to come into the markets. And then if you look at the Japanese yen, you'll see that we've gained a lot of strength. Actually, we are at 7.5. Now that shows how other countries are reacting to these tariffs, through devaluation of the currency, because that loss could be signaling that the Japanese market, or the Japanese are playing around with the yen to ensure that they stay competitive in the global markets. Thank you, Lungile.
All right, thank you, Mr. Spear. Well, there you have it. Senator Spear's analysis. Certainly, seriously, Donald Trump's tariffs are shaking up economies after what you've just seen on our screens, the numbers you've seen, and Mr. Spear's analysis. Well, there you have it. We've come to the end of our program today. See you again tomorrow at exactly 2 p.m. Enjoy the rest of your day.
Sent to the nipples. Chance for a volley!
Finally, 2025 is our year.